Hedge funds are drowning, and that's why you, if you're an investor, have got to be careful about the high watermark. But what is it? Here we've got a hedge fund manager to explain it to us and what are kind of the, the pitfalls of it. Anyway, it's Pat Morris of Hagin Capital. Thank you very much, Pat.
Thank you.
High watermark, hedge funds are down. Explain.
Well, the basic idea is that when you invest in a hedge fund, they take a rather high fixed fee and then a rather high incentive fee.
So that's up to 20% sometimes, right?
2 and 20. At one point, we were looking as high as 4 and 40 for some of the real, what you'd call well-recognized, very high-performing hedge funds, at least in the past few years.
And that was just on the gain, though. That was on the
that was just on the gain.
40% performance on the gain.
Correct. And in some places, there were hurdles, which meant they had to make not just a little gain, but a big enough gain to really incentivize you to want to pay those very high fees. The high watermark is designed to say, well, if you didn't make money last year, it's our job to go back to work and try to make you that money back plus whatever we can make you this year. So that's what the high watermark was designed to do. We only make money if you make money.
No, now hedge funds are really in the down. It's not something that I can see many of them getting out in 1 year, and that would seem to me that they would forfeit the performance fee if they can't get it back to the high watermark. But there's a danger here, right? That some people close up shop. Can you explain what we need to look for and why it's bad and all that sort of stuff?
Sure. In a market recovery or in a more normal market, it is going to be very hard for these funds to return 50, 100, 150% so that they can get back above their high water mark and get paid for the work that they do this year. So in a sense, you may be incentivizing very talented managers to close down their fund or to leave the fund that they're at and start a new fund with a fresh high water mark.
Okay. Now, if you do find there's a new fund with a manager with a lot of experience, is that something you should jump in and say, oh yes, that's the one, or is that like a bad idea?
Well, I think one of the things that you have to be very concerned about is balancing two very different issues. One is if you've identified a very talented manager and they've started a new fund because they were buried under a very difficult high watermark, you may want to take a chance on that manager because they could have an outstanding year. It's your money and you should certainly get the highest return available. But you should also be very worried. When I tell you I'm only going to get paid if you get paid, and that part of the contract doesn't work for me as the manager, so I decide, well, I don't like that part of your contract, so I'm gonna refresh it by dissolving and starting something new. One maybe should take a step back and say, is this really the kind of person I want running my money?
Okay, well, thank you very much. That's Pat Morris of Hagin Capital saying, if your hedge fund manager walks away from a problem, maybe you shouldn't put your money with them. I'm Simon Constable for the Wall Street Journal Digital Network.